Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 21st COT report in 2014. As usual, we're going to start off with the changes in commercials positions. So here we go. As you can see, we've got Dow Jones on top of our list with a 22% change in commercials positions. You can see that we've got the same change size in large speculators. The changes can be seen over here, but as you can see on the chart, basically these are pretty frequent change sizes, so nothing too unusual. It is, of course, a bearish COT change signal. May affect prices, I'm not sure. Since it's so frequent, it's hard to tell, but I'd rather look at the 5 years chart and see the extreme situation. I know we've talked about this last week, but for those viewers who are just joining the review, you need to see that it is a very interesting situation because we actually have a bullish extreme in the market. I'm just showing you these points in time when these bullish extremes were capable of putting bottoms in these short declines. Now we've received this extreme at a point in time when actually prices are rising pretty dynamically. So the COT report right now does not tell us anything about a top that could rise soon. It suggests that this rally may easily continue for some time. Let's move on and have a look at the gold market, where we have similarly a 22% change, but of course this is a bullish COT change signal. That's the difference compared to Dow Jones. And you may see that it is not that usual to see such changes, so it's not that frequent in gold right now. So let's have a look at these changes and see how they affected prices in the past. I'm trying to show you some larger changes. As you may see right now, these were actually pretty good signals in the past. Of course, there may be some that were not, but in general, what I'm experiencing right now going through the chart is more or less these larger changes were capable of affecting the price of gold. Now, as always, we need to look at the longer picture. Here we go. You may see that actually we had the last major extremes were bullish extremes last year, one more or less in the middle and then at the end of 2013. Right now we are more or less in between, still closer to the bullish side of the extreme rather than the bearish side. So in my opinion, these extremes may actually be affecting prices. Even though we see a decline in prices, I'd rather say that the bullish extreme is stronger at the moment. Of course, we can eventually come to a point where this extreme widens even more, parallel to declining prices. Of course, we can't tell yet if that's going to be the case. S&P 400, Russell 2000, NASDAQ 100. Let's move on to large speculators COT Extreme. Maybe we're going to see something interesting over there. Here we go, Mexican peso. We've got some currencies on top, although we do not have a great extreme, at least report-wise, number-wise. But anyhow, let's open Mexican peso and see what this 51 report extreme tells us. Jumping to the 5 years chart to see everything more clearly, you may see that we actually had this bullish extreme not long ago. And as you can see, prices have reacted pretty nicely to this signal. Right now, we're moving in the opposite direction as the rally prevails. We are seeing commercials going back to deep net short territories, while, of course, large speculators back long again. Small speculators optimistic about the market. They're actually becoming pretty extreme. We do see larger extremes in small speculators in the past. This widening of the extreme, I believe, may continue for some time. There's still some space left. which basically means that this rally may continue. Oats, we have a 50 report extreme over there. Let's open the chart. Here we go. And the 5 years chart. There we go. You can see that basically for some time now, since the beginning of 2000, I'm sorry, we have an extreme over here. The mid 2013 extreme, being a bearish extreme, was the last major extreme that we had in the COT report. Interestingly, we could not see a significant extreme at these very dynamic price movements, so the report was not too helpful back then. And at the moment, I wouldn't consider this to be anything interesting from the COT report side, of course. So let's just move on and have a look at the euro, where we have a 43 report extreme. Again, not too large, but hey, that's the case this week. And of course, we're looking at large speculator COT Extreme, so let's stick to that right now. Yes, in the euro, we have actually the last more or less extreme that we can talk about was this bearish one. But I'd say that the major extreme that is still affecting prices is still the bullish extreme of 2012. That came a bit early, but as you can see, eventually pushed prices higher, and it's what we're seeing right now. I wouldn't be sure if this is going to be later, looking back at the chart, the bearish extreme. I do believe, and let's open a 10 years chart. Here we go, that we may see greater bearish extremes in the future. So let's say if commercials could reach, let's say 120,000-30,000 contracts in that short level, that'd be a unquestionable bearish extreme that would suggest prices are not going to go any higher. Okay, I believe that's going to be all for this week. If you would like to have a look at the COT charts, you can do so at our COT charts page. And of course, if you would like to have this detailed COT analysis system, then check out our service. You can add other great functions to our table, and you can look at new COT report types, other data types. You can look at market complexes as well. Lots of great functions at our site. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.